Welcome back. Big week for oil. Oil prices stabilized slightly after posting multi-year highs this week. One analyst at Bank of America this week predicted that oil production will collapse in Venezuela and disruptions in Iran could drive oil prices to $100 a barrel in 2019. We haven't seen that in a few years. We're going to talk about that and the economy with our Fox Business All-Stars for reaction right now. Kristina Partsinevelos is with us, along with Susan Lee here on set, along with the Wall Street Journal's editorial page assistant editor, James Freeman, who is also a Fox Business contributor. Great to see you all. Thank you so much for spending the time this weekend. James, what was most important or struck you this week in terms of the headlines of the week?
Yeah, I think the most encouraging sign as we see this rising economy is the Institute for Supply Management report came out early in the week, and what it's showing is big increases in capital expenditures. This is business investment, and this was what was really lacking over the last decade or so. Companies just did not have the confidence to invest. And what we're now seeing is manufacturing and non-manufacturing both talking about big investment in 2018.
I like it. And partly you have to believe that the rollback in regulation and the anticipation of the rollback in regulation had business managers starting to think about, OK, now I am going to let loose and put this money to work.
Yeah, that's exactly right. It's a very benign environment. Again, this is the big change over the last year or so. Less regulation, more than 1,000 rules from Washington that have been canceled, scrapped, put on the back burner. Obviously, big tax cuts. So, yeah, that kind of natural American risk-taking seems to be reasserting itself.
We're expecting 3% growth at some point. And you wonder, with oil prices where they are, Kristina, is that an indicator that we're looking at a strong economy, or are we looking at $71 a barrel oil to perhaps be something to watch that will cut into growth?
Yeah, well, there's even Oxford Economics, they put out a report saying that if oil stays above $70 a barrel, that's going to eat away at least half of your gains from the tax cut as a consumer. In terms for companies, what we're seeing is that some have already said they're raising their prices. 3M, Whirlpool, several, because of the higher input costs, because of the higher oil costs. So that can actually bring markets down, especially if rates start to climb in June.
Which is why we've been watching the fear of inflation.
Yes.
And what happens in terms of the reaction from investors. So far, it's not an issue. But you're right. We are seeing pockets of this economy.
It's playing a little bit of a role in markets right now because we talk about this peak earnings season. But I know that there's this fear of inflation, and that's being reflected in certain companies like Symantec or Caterpillar that are saying their forward guidance possibly could be lower because of inflation concerns.
That's a good point. Meanwhile, the backdrop very strong in terms of earnings, Susan. You've been covering this a lot.
I have.
26% earnings growth for the S&P 500 in the first quarter.
That's right.
I have not seen that number in a couple of years.
That's the strongest profit growth that we've seen in 7 years. Best earnings season that we've seen in 20 years.
Wow.
But, you know, this isn't really trickling into the stock market because we're just barely a few points into positive territory for the Dow in 2018. And this is because investors are taking a look at the backdrop that we're in. Rising yields, higher borrowing rates to come, and also we might be in the late cycle of this 10-year expansion that we've been in, and people are thinking, how much longer can the good times last since 2008?
Yeah, but you know what? I mean, at this point, you've got an earnings season that is going really strong, and the year is expected to be strong, too. You also have revenue, right, James? So, I mean, what are we focused on in terms of the potential for risk here in this market, in your view?
Yeah, you're paying a lot for earnings right now. It seems like there's a case for it, given that it's been growing so fast. But as we look at risks, I talked about the Institute for Supply Management. All good news about more capital investment. But a big worry among the people they survey is trade. Are these tariffs, quotas, the Trump agenda, while he's pursuing the art of the deal, what if the result is not more open markets, but more tariffs and higher cost to trade? That's the big, I think, threat on the horizon in terms of most businesses.
This is a really important point that you make, especially as we look ahead to the week ahead. This is a bit of a deadline. I know it's a soft deadline, but for NAFTA, the president has said he wants to see a new deal in place in terms of NAFTA by May 17th, which is this upcoming week.
Right.
If we don't have a deal in NAFTA, I would expect markets will react to that.
Yeah, and also we have a deadline for the Chinese tariffs as well, $50 billion and then another $100 billion on top of that. The Chinese vice premier is coming here to try to negotiate maybe some purchases to ease American concerns and maybe placate the U.S. president. But there are a lot of, I would say, trade headwinds in the markets that investors are really conscious of.
Yeah, and to just add to that, I think with NAFTA, they're going to move forward with an agreement of sorts just to please the auto sector right now, because that's a priority, determining how much content is going to come from the United States and what the threshold for the minimum wage at $16 US an hour. So I think there's a lot of complications, but they are going to move forward at least to make some promises for the auto sector.
Yeah, it's true. And that whole issue of origination.
Yes.
Where does a car or a vehicle get produced mostly? Is it North America? Is it Canada? Is it Mexico? The issue of origination seems to be front and center. And as you said, the salary.
Yeah, $16 US an hour.
$16. Yeah. What's your take on that?
Yeah, and that's not pro-growth, to have government more involved in setting salaries, figuring out what gets built where. This has been one of the great successes of NAFTA, is that you have these supply chains all over North America. Parts are able to move freely, relatively freely, and the fear of disruption there, I think, is very real. So I think the best case scenario there is they get a modest deal that the president will call a win. And he continues to, I'm hoping he's focusing more on opening up China versus fighting about trade with the rest of the world.
Well, look, let's face it. Everybody knows that China is not open. You know, you want to do business in China and sell to the 1.3 billion person population. You may get a joint venture. You may be able to own 49% of that JV, but that's it.
Well, you may be able to own 51%, but also because of the pressure from the Trump administration in the auto sector and financial services. Those are changes that were made just recently. But you're right. In the past, to make money in China, to sell to the Chinese people, you had to enter these partnerships where not only do you not own majority, but then you also have to transfer sensitive information like technology, sensitive technology transfers as well.
Right. In some of the most important industries like AI and robotics.